I'm delighted to have Chris Wade here. I first knew him when he was part of the UK government, helping think about the venture capital unit and bringing inward investment into the country. And now he runs probably the best and most successful fund of funds in Europe, looking for GPs. And we've got some questions to kind of drill into, but just to set some context for Chris and for you all here. When we do our annual GCV survey, about half of the active corporate venturing units are active LPs in venture capital funds. Jay from GCV actually is an LP for them in their first fund. We support a number of those because I think the way Jay described it is the way we kind of think about it is less about are you corporate or a VC, but it's are you actually trying to help support your LPs, whether they're corporates or others, and are you trying to help and support the entrepreneurs as well? And so I think, Chris, perhaps if I open up with that first question, what does make a good GP?
Why, do you know any?
GFT's very good.
It's very good. Good morning, everybody. Is it still morning? It still is, just about. Could I have a raise of hands who are GPs? I know you are. So just a couple. Can I ask if anybody would like to be a GP? Would like to run their own fund? You'd like to run your own fund? That's fantastic. You would like to do that? That's even better. Because actually, it's really quite simple. You need to decide on an investment topic that is relevant to your skill sets, and so that you can talk to the entrepreneur, you can talk to the founder about what it is they're doing and understand it. You need to have huge empathy with the ups and downs of the venture capital cycle. There is no company that has got to $1 billion in any part of the world that has just done it in a straight line. Most companies will have had near-death experiences. And finally, you need to remember that there are two sides to your business model. Everybody talks about investing. What you also need to talk about is divesting, because people who are going to give you capital, or more importantly, people that are going to give you more capital, need to have that first set of capital back at some point. And this is a hot topic. It's a really difficult topic. It's easy for people like me. You know, we've invested in over 90 European VC funds in the last 10 years. It's really, we want DPI, we want distributions. But the answer comes back, well, I've got 10% of 11 labs, and they've only just got started. Why on earth should I be selling some of that? What is the logic of doing that? So this is actually quite a difficult conversation. So, good GP, you meet somebody who says, I'm going to build this kind of VC firm focused on these things, and here's the 5 reasons why I am qualified to do it, and have a huge empathy for the founders. Venture capital, despite all the things you read, all the silly programs on television and films, and actually a few silly people in our industry, is a very humble business. And the reason it's a humble business is lots goes wrong.
Oh, powerful. Thank you, Chris. And the fact that you've backed so many GPs, you've really sort of helped transform the continent. I mean, our first LP commitment was to a group called Black Opal Partners. Eileen and Tara, who set that up, I think really sort of struck that chord of, you know, being able to find a good thesis. They knew a lot of the sort of the background and healthcare and added a lot of value. And I suppose, Chris, as you think about it from Isomer's point of view, and as an institutional LP supporting them, how do you weigh the different parts of what they can add value to? Is it about the deal sourcing? Is it about the deal exiting? Can they actually find the companies to sell or IPO? Or is it more about the value add within, helping them find the customers, helping them find the innovation sources? How do you sort of weigh those different factors, or is it all about one thing over the other?
So it really is two very simple things. I mean, fundamentally, there's lots of things that are associated with it. Finding great deals. Let me tell you something. I could give each and every one of you 100 million today and give you a couple of years to deploy it in Europe, and you would do so. You would do so. You would find deals to do. The question is, do you invest in the right companies and the right opportunities? And there's a funny thing. When we first started Isomer, we used to ask a question which, thanks gods, we don't need to ask anymore. And that is, what is your proposition to the entrepreneur? And of course, in the early days, the answer might be, I've got capital. I've got capital. But of course, it isn't about that at all, because good companies will have lots of people offering them capital. So it's just about having that special secret sauce. We hear stories. In fact, I was in Stockholm. I went to EQT's AGM yesterday, and we have a couple of GPs in Sweden, and I met with one of them, and they were talking about a company that some of you may have heard of called Lovable. It's become another European AI success. They're just closing a multi-billion round as we speak. And the GP, one of our GPs, was telling the story of knowing that entrepreneur for 2.5 years before convincing him to give them capital. So that's the first thing. The second thing, and I've slightly alluded to it, is having the mental discipline to sell your children. Because that's actually what the relationship's a bit like. And I sort of know that because I was a child for about 15 years of my life, in the sense that I was building my own companies. And having this idea that you're taking other people's capital, you're the custodian of it, you deploy it, but you need to return it, ideally with a premium, at some point, is so obvious and clear, but all we ever hear about is all the great deals and all the wonderful investments. So this is, I think, one of the things that is evolving now. Now, what has happened in the last couple of years as liquidity has become quite difficult is something that's happened in the US for a long time, and that is actually using secondaries as a transaction mechanism to get liquidity, but only selling a partial amount of your ownership. We have a portfolio company that was the pre-seed investor into, not the only one, but one of the key ones, into a company called 11 Labs. This fund is 2.5 years old and already has 2x DPI. I mean, they've returned twice the amount of paid-in capital that LPs have given them, and that's unheard of. That is truly unheard of. It normally takes 10 years to get to 2x DPI, and that's because they said, we're going to sell 1 or 2% of 11 Labs. And it's that mental fund management discipline that turns people into great managers. I am going to say the case for the GP also to have the discipline to say, go away, LP, this is a wonder company, now's not the right time. Because remember a really important point. L means limited. And in some cases, very.
That's great. Thank you, Chris. And we're seeing, and we heard on the previous session about how more the VCs are thinking about their platforms, how they add value. We're seeing VCs become RIAs, effectively giving them more flexibility to act like a corporation, become a corporation, take different types of stake, hold it past public, all of these types of things. But what about the rest? Do you have a view about where the overall number of VC firms will go? You've backed 90 GPs. Is that a good number? Should there be tens of thousands of GPs as we've seen grow over the past few decades?
Well, it's a Darwinian business, venture capital. And therefore, there are people that raise capital and are not successful. It's a get-rich, extremely slowly business, venture capital. There are great riches to be achieved, but boy, does it take a long time. I interviewed the founder of Creandum Ventures last year, and he said the dark secret about venture capital is it's really a 17-year business, not a 10-year business or an 8-year business, as all the LPAs suggest. So the idea of having an expansion of your investment is an interesting one. It's an interesting idea to have a platform. But I would firstly say there is always going to be a role for that VC that sits in Prague, who happens to be close to the founder of UiPath, that sits in Stockholm, that happens to be close to the founder of Loverpool. That role will never go away. Now, how many there needs to be is a really good question, but I think the idea of the RIAs is for a very limited few. Go back to my point about skill sets. So you're now going to have skill sets about early stage, about growth, about public markets, secondary transactions. And therefore you can see why some of the big firms are doing that. Now let me leave you on this topic with one reason you should be thinking about this. The world in venture has built, or funded, I should say, a lot of software companies. A lot of software companies that have become extremely successful. And what software companies do, obviously, is sell to enterprises. And they become very successful because they sell lots of seats, they sell lots of licenses, etc. Now imagine a world of AI where a legal firm has no people. There are no seats. And so actually the question becomes not about selling AI software to a legal firm, it's about building a new legal firm on a completely different technology platform and basis, and that does require significantly greater capital than venture capital offers. So there's a reason for it. And AI is the driver.
Fascinated. I'd love to hear more of that. We're nearly out of time, so perhaps we'll park that, put a pin on it, as people like to say, and come back next year for that discussion thread, Chris. But finally, a kind of yes or no type of question. Isomer, would you back a CVC or a spin out from a CVC?
Spin out, yes.
But not a CVC if it remained owned and run.
I think it's difficult because you'd have to really convince yourself that there is an alignment between all the LPs. But boy, spin out, absolutely. I mean, imagine the skill sets and the experience and the knowledge that you have. So absolutely.
So maybe those who put their hands up at the start of the question might need to see Chris afterwards. Perfect. Well, please join me in thanking Chris Wade and Isomer. They've really done an amazing job over the past decade. So.
Thanks a lot.